Okay, good afternoon, everybody. Just after 1, so we're going to go ahead and get started here. Welcome. Thank you for joining us on our second online workshop titled Banking for MSBs. Today, joining the discussion from the Capital Compliance Experts team will be myself, Kyle Oden, our banking expert, Jerry Dobby.
Good afternoon.
One of our CAM certified specialists, Debbie Owens.
Good afternoon.
And Mitchell Souza.
Good afternoon, everyone.
We're all going to be sharing some of our personal experiences on this discussion and regarding specifically the top 10 reasons for being declined or exited from a bank. On behalf of all of us, it was really great seeing many of you at the FISCA conference in San Francisco earlier this month. We had several discussions with a lot of you, many others, and you shared some of your personal challenges in managing your banking relationships, and this is the very reason we hold these workshops, and specifically this one. We really want to provide that educational resource for our customers and ultimately the industry to reach out to. Some of the guidelines for today's workshop will be timing. We're going to try to keep this to about 45 minutes. We know everybody's busy, has a hectic schedule, and then we'll leave about 10 to 15 minutes at the end for questions. Regarding questions, go ahead and type your questions into the chat box you'll see at the bottom right-hand side of your screen. Everybody is muted, so make sure to type your questions into that chat box. And make sure you send those questions only to the host. That will prevent any confusion for some of the other members that have joined. We will answer as many questions as we can in the allotted time. In the event we're not able to get to your specific question or you think of something after the workshop today, go ahead and feel free to reach out to us anytime, and we're more than happy to provide some one-on-one assistance. We hope to answer everybody's questions today that you have regarding banking. However, of course, don't hesitate to reach out to us afterwards, and of course, you can always visit us at capitalcomplianceexperts.com for further information. With that, I'll pass it over to Jerry to go ahead and begin our discussion.
Thank you, Kyle. Good afternoon, everyone, and thank you again for joining us for our online workshop. I am very excited about today's topic, especially after meeting a lot of you during FISCA. And the majority of you expressing concern with your current banking relationship or the future of your banking relationship. I am really looking forward to sharing my 10-plus years experience working at a big bank and sharing some personal experiences of why your financial institution would decline your application or exit your relationship. I've worked with Debbie here a few times over the years on the other side of the fence as a bank examiner, and it is now my sincere pleasure working alongside her, helping our clients maintain or obtain their banking relationships. Let's give a big round of applause for our Director of Compliance, Debbie Owens.
Thank you, Jerry. I'm very happy to be here today and discuss and offer what I hope everyone will find some helpful information to this really important issue that's affecting everyone listening here today.
All right, so with that very brief introduction, we'll go ahead and get started with our list. So we will be starting from 10 to 1 today, and so the first, number 10 on our list is procrastination. So, procrastination is not only bad in life in general, but it's really, really bad if you're going through a bank audit. Many times, as my experience as a former bank examiner, we would get many of the documents, on the 11th hour, and by that time, it's really too late, and there's really not much that can be done. So when you get those letters from your bank, or if you know that you are going through this audit, make sure you inform your third party, which is, for example, us, early, so we can inform the bank that, a mutual client has retained us and we will be working to get the documents in place. So essentially, do not procrastinate. Immediately engage and get those documents in early for review. I mean, Debbie, what is your experience with these situations?
Right, Jerry. I know you're speaking in terms of the bank's perspective.
Yep.
As a consultant on the opposite side, it's our job to prepare our clients for a successful audit and obtain a continuance of their bank account. As you mentioned, we do get many calls at the 11th hour, in many of these cases, we've been successful in reaching out to the bank examiner, and then once we advise them that the client has retained us and they're comfortable that we're going to be assisting them, in many cases we're able to go ahead and secure an extension to give us time to go ahead and get our client adequately prepared for the audit.
Yeah, and I remember those instances, Debbie, where it was you on the other line at the time requesting an extension, and I would say, okay, Debbie Owens, this is going to be good. So, I would trust that because we knew that you would handle, you would take care of business. So, that is one thing out there, for the people out there who are in this situation, do not procrastinate and just make sure you get those documents in on time. So here we go on, moving on to number 9. Number 9 is non-renewal. So as a money service business, I'm sure you all have licenses, documents, and permits. I've experienced having to decline a number of clients simply because their licenses were expired. It is important to make sure that all your licenses, permits, and other MSB and business-related documents are up to date and not expired. If a document is expired, it may extend the turnaround time to meeting a deadline. And it's one of the most frustrating things because there's so many clients out there that should have been approved, could have been approved, would have been approved if all their licenses were up to date. Debbie, can you chime in on this? Have you seen this during your experience?
Sure, as you mentioned, it's absolutely critical to keep that licensing and permits current. As many of you here know, with the FIN registration, there's no renewal or reminder that you're going to receive. It's your responsibility to make sure that that renewal is filed timely. And we understand how busy all of you folks are out there running your businesses. And a lot of our clients, we help them through our annual oversight program. And what we do is we'll send them email reminders when their licensing is due, just to help keep them on track. Also, even as far as when it comes to employee training, we make sure to send out reminders for that as well, just to make sure that there's no lapse in annual training. So we really try to do our part to make sure that all of that really important information stays current.
Yeah, thank you, Debbie. And that's really great because, a lot of the times, like what you mentioned, a lot of our clients and MSB businesses out there, they're busy. They're running around making sure the customers are happy, cashing these checks and being regulated. And sometimes something as pivotal as an expired license can be the difference between being approved or declined. And at this point, sometimes the financial institution, they don't care how much money you have in the bank. They don't care how long you have been a client. They have to do their job. Right. And if those licenses are expired, they can't approve you. So, that's, don't you guys agree?
Absolutely.
Yeah, I was sitting here listening, and I thought of the concept of your driver's license. If that expires, technically you're not even supposed to drive.
Yeah.
So,
right.
Think of it that way. You can't, if you don't renew your license, that's definitely going to be a problem.
And it is part of business, and it should be taken care of. So, exactly. A very great point there, Mitchell. So let's move on to number 8. Is using templates. So as a former bank examiner, I've worked with many MSBs over the years, and many of them are agents of other companies like, for example, Western Union, MoneyGram, RIA. And, these programs are great, and they cover everything these companies have to offer. However, if the client conducts additional MSB activity that is not associated with their service provider, for example, if you have check cashing as an extra activity, prepaid cards, or money orders by yourself or with another company, that provided or adopted AML program will need to be updated and make sure that it caters to the specific activities of the MSB. Debbie, when you do these reviews for our clients, what kind of AMLs do you usually see from our customers who are calling us for help, who are calling for advice on how to improve their AMLs?
Right, yeah, I do a lot of reviews and see, as you mentioned, Jerry, a lot of those cookie-cutter templates coming through, perhaps from their money order or money transfer provider. Or actually what's even worse is we have merchants who try to get by with a program that is copied and pasted off the internet, and they're trying to change just the names and doesn't cover all the services that they offer. And that's probably the most critical part of an AML program, is that it's customized to your business and covers all of the services that you offer.
Yes, thank you, Debbie. That's 100% accurate. And since Mitchell here inspired me with analogies a little bit, with the driver's license, I'm gonna try one. I'm gonna try one here for you guys. I mean, the best thing I can think of. In all seriousness, AML programs are sort of like fingerprints. No two AML programs should be the same. Each business has different volumes, different locations, different products, different personnel, different customer base. It is important to make sure that your AML program is a perfect reflection of how your MSB operates. Well, how about that, guys? That's
perfect. That was good.
Well, Kyle here has a big old smile on his face. I think he had something to say.
Well, I laugh about this topic actually because most recently I was working with an MSB, and it seems like all of our business owners tend to know somebody or have a family member in the business, and their bank was actually requesting an updated AML program, but his brother also owned a check cashing facility, and he figured, hey, this guy's already paid for an AML program. I'll just utilize his and change the name, and submitted it to his bank and immediately got declined because it states services and policies for which he does not perform in his check cashing business. So again, it goes back to tailoring that program for your business.
Right.
Here's another analogy. It's like borrowing your brother's ID to get into the bar, right?
Exactly.
It's just not going to work. So
exactly.
It's very important to do that. That's great, and we've all experienced this somehow. Mitchell, from the sales standpoint, when you first hear a customer talking to us, here's my AML. You see a template. You see something borrowed. Kyle, you see the same thing. Debbie, as a CAM certified specialist, you see it. As myself, as a former examiner, we see it all the time. We cannot stress enough that it is important to get that specially catered anti-money laundering program for your business.
Absolutely.
All right. Okay. All right. So moving on to lucky number 7. Inadequate monitoring. Okay. So a lot of the times, the monitoring process, you have to do something that works. Over here we have on the picture, it's manual versus electronic. As a former bank examiner, one of the most important things I looked for is a client's monitoring process. From my experience, though, electronic monitoring technology was way more effective than manual monitoring. Although the manual monitoring is acceptable, the bank themselves, they were more comfortable whenever technology was involved for monitoring because of it being more accurate, efficient, and had better safeguards. Debbie, when you review these AMLs, and can you tell us an experience where they have technology or they don't have technology, and if there is a difference from how you find those deficiencies?
Sure. In my opinion, electronic monitoring is much easier and a much more effective way to monitor your transactions. As I mentioned earlier regarding the templated AMLs, I've seen many reviews, and part of that template is a monitoring checklist that only covers the services for that provider. So once again, not all of your services are offered there that need to be monitored. We've actually been pretty successful. We've developed an electronic transaction monitoring system, which is being utilized by many of our customers. It's such a critical piece of your AML program. Otherwise, you're risking CTRs, SARs, and other reporting requirements that are going to be overlooked, which are going to result in a deficiency or worse, maybe potential fines for not filing those items timely.
Yeah, and which is a good point. And I've heard Mitchell mention all the time that, when a customer starts using the technology and they used to do things manually, these clients are just so happy that it just makes everything so much easier, and it makes our check cashing processes a lot more credible. And anytime anything is credible, the bank really appreciates that. From my personal experience, I have approved manual monitoring processes before, but it's just basically like doing an Excel spreadsheet manually. It just takes so much time, and if you have the staff to do that, be it. But technology will make it a lot more efficient, and sometimes the more efficient you are, the more customers you can handle, and so, better for the business overall. So thanks for that perspective, Debbie. Okay, and the next, number 6, we have unqualified third parties. Ooh, yeah. So, this is a very, very interesting topic from my experience because, being on the helm of making that decision for a client, whether to approve them or decline them, many times we get independent reviews that are just not sufficient. It's just not good enough. So there was a general understanding and a general rule that, when a bank mentions a qualified third party, what they usually accept are CPAs, attorneys, or a CAM certified specialist. From personal experience, the CAM certified specialist always had the better review. Debbie here, our CAM certified specialist, and please share your experience creating these reviews to make it more not just appealing to the bank, but speaking that same language of the bank, and they really accept it.
Sure, I would love to add to this. So accountants, they're great at preparing your taxes, your balance sheets, your profit and loss statements. Attorneys are great at researching law, and they're great at preparing legal documents, and guess what? They're going to charge you a lot of money to do that. We are not accountants, and we're not attorneys. We're CAM certified consultants, and we specialize in compliance, period. What that means for everyone here participating in this workshop is that we can save you money in preparing you for a successful bank audit and to achieve the ultimate goal of securing or maintaining your bank account.
That's a great and very, very crucial point because, I keep mentioning as a former bank examiner, but, please bear with me because this is like perfect for the topic today. When I was examining these cases or these audits for clients, a lot of the times they attempted to create their own independent reviews, and many times they would hire an attorney just because they're an attorney. And with all due respect to that profession, I have never come across an attorney who just specializes in AMLs or creating IRs yet. I mean, I know they're out there, but personally in my professional experience, I haven't experienced it yet. I mean, I've had so many clients have their AMLs drawn up by their divorce lawyer or their bankruptcy lawyer or, things of that nature. And, they do a great job. It's just that they don't understand the language, and no matter how many pages you put in there, if it's not the right content, it's not acceptable.
Right.
And, and since we're in the mood for analogies here, thank you, Mitchell, the one thing I always used to tell some of my clients is, after failing the review 2 or 3 times is, why would you hire a body shop to work on your transmission, right? I mean, the body shop, both of them work with cars, both of them know how to fix cars, but that's why there are transmission specialist shops out there for a reason, because it's what they do, it's what they understand, and it's and it gives you as a client, that peace of mind of getting it done right the first time. Because I've had so many clients who've gone through the review process 2, 3, 4, 5 times, and it's just usually the same person that you're paying a lot of money for who's not taking that time or has no experience with the language and, the proper content of what a review or AML should have. So, it's a rule of thumb. You don't have to do it, but to give you that peace of mind and get it done the first time, as a bank examiner before, I mean, I really enjoyed and was excited when I saw a CAM certified seal on there because I knew my job was done. Mm-hmm. It's done. For the first time, everything should be good to go. I mean, don't you guys agree?
Yeah, and this is such a relevant topic, Jerry. I can't tell you how many calls I've received from an MSB that said, hey, I paid so-and-so thousands of dollars to conduct my review, but I failed my bank audit, and I said, okay, well, who did you have do your review, expecting to see some sort of CAM specialist on the review, and of course it's a friend, a family member, an attorney, or a CPA, you would expect one of these guys to be able to get the job done. The customer tells me, I said, yeah, but they don't specialize in MSBs. They don't specialize in reviewing AML programs, and so it's really imperative that you reach out to a specialist.
Yeah, and it is tricky too from the merchant's perspective. I understand, because a lot on these letters you often just see qualified third party, right?
Yeah,
It doesn't say CAM certified specialist. It's a little bit indirect. So you look at the phone book, you're going to see a bunch of attorneys. You're going to see CPAs, all of that. So it's not right in your face, but that's why we like educating people, because it's good.
Yeah, and then one thing to add to that too, a lot of the people who try to attempt it to do it themselves, and they fail. They fail sometimes because they're busy. They're running their business. They're handling the day-to-day compliance operations. They're cashing checks. They're fighting fraud, fighting money laundering, and sometimes people don't have the 4 to 5 hours you have to dedicate to really looking into a program and creating the correct review. So that's what CAM certified specialists are here for. All right, and let's move on to number 5, failure to adhere. So here's the funny thing. I'm not too sure if it's human nature or not, if Kyle or Mitchell or Debbie or I think I do this sometimes, but after you hire a specialist to do your review and creating an updated AML program, what's the point of all that when it's not being followed? There were so many instances where I have worked with clients who hired third parties to create the AML programs and conduct their reviews or adopt a templated AML program, but they feel that that's all that they need to do and that's it. Having something in writing is very different from actually implementing it. Debbie, what are the most common issues you see with our clients when they first send you a copy of their version of an AML?
What you said is very true, Jerry, about having that program in writing and not really understanding what's in it. It's so important that the compliance officer and all your employees understand it and have the proper training, and including all the policies and procedures. I feel it's really important that you create a culture of compliance within your entire business. We can even help with, we have lots of learning plans in place, and we can educate compliance officers and their staff in every aspect of compliance, from the basics of just knowing what the Patriot Act is or knowing the various acronyms, like what does BSA stand for, all the way to educating staff on how to handle the cashing of corporate checks. All of the employees, everyone should know and understand all of the policies and procedures in the AML program, and it's really important that they have, not only the initial training, but annual training as well, because people forget. They have to be, have a refresher course every year. Super important.
Yeah, and that's also relevant, for when there's turnover in a business. New employees need to adopt these policies and procedures as well. So ongoing training is very important.
That's a very good point you put out there, Kyle, because, like that old saying, a chain is as strong as its weakest link. Because if you have that one employee who is not following the procedures, accidentally cashes a check for an OFAC customer, fines are involved. And it just takes that one bad transaction that can really ruin, many things for the business.
Mm-hmm.
So thank you for sharing that experience and your point as well, Kyle. That's very true. Employee turnover, as much as we don't like mentioning that, it does happen, and you do have to take that time to train new employees with policies and procedures. All right, moving on to our next topic, which is not knowing your business. So, I'm going to let everyone know something here, but banks will find out all your activity. It's always better to disclose everything. The more you know about your business and AML policies and procedures, the better. Believe me, bank examiners love it when you brag about your policies and procedures and knowing them, because that gives them the signal that it's going to make their job a lot easier when I'm speaking with someone who knows what they're talking about. And, I knew that, like how certain MSBs operate, they have that aspect of being too busy or not having the time, or sometimes they don't disclose all their activity when they're being examined. Banks will find out, and it is your responsibility to know, to know how your business is operating. Debbie, can you share an experience where you had one client, who did not know their businesses or whether they used technology or not? They said they used technology, but they did, but, it's just nothing was coming into place.
Yes, absolutely. Technology is pretty important. I know there's a cost there, but, it's well worth the investment when it comes time for an annual audit. As I mentioned before, I've performed many audits, and I've seen some really unique forms of data retention. In fact, one of the reviews I did was for a check casher, and the way they kept track of their checks was they wrote it down in a notebook and every transaction, and each customer was assigned a 4-digit code, and every time the customer came in to cash a check, all they had to do was recite that 4-digit code. That was their customer identification policy.
Wow.
Obviously, there's some major problems there, most importantly being that these customers obviously are not being screened against the OFAC SDN list. As everyone listening in here today knows, I'm sure, it is illegal to process a transaction for anyone on that list. The fact that this customer was not using any type of technology, was not screening for the OFAC list, resulted in a deficiency on his review. Fortunately for this customer, we were able to help them. We got him set up with some technology for their check cashing. The bottom line is your bank needs to feel comfortable with your business, and they need to know, understand, and feel very comfortable with your transaction processes.
Thank you, Debbie. That's you said it all right there. I mean, it's important that you just, you have that, those safeguards, because, I mean, I've come across so many OFAC violations with clients, and it's not a pretty picture.
No.
So, and I've also come across, business owners who don't know their business. They hire the compliance officer, they hire the employees, they go through the training, but when it's time for the bank audit, we have to ask the business owner, so what do you know about your policies and procedures? I don't know, I don't handle that. I have my compliance officer handle all that, and I'm just here to, I come to the store once a week or so to see how everything is doing. And, that's not good because, first of all, the compliance officer is, most of the time they're not an owner. They don't own the store if it's a sole proprietorship. They're not even a signer on the bank account. You do need to take that responsibility to know the business, and sometimes when you adopt certain technologies, you get to know your business a lot easier because everything is there pretty much.
Mm-hmm.
Definitely. All right. And number 3, wow, almost there, okay? All right, number 3 is red flags. Okay. So I'm going to say a quick sentence on this. I mean, it's going to be a little harsh and a little blunt, but from my experience, you need the bank more than the bank needs you. I mean, Debbie, what are your thoughts about this?
Very true.
You guys going through these exams and reviews.
Absolutely, Jerry. Unfortunately, sometimes merchants just don't take their banking audit seriously enough. Even though our company has a lot of really good relationships with many banks and a lot of the examiners, sometimes it's not enough if the customer has not handled the relationship in a positive manner. I had one customer who we were helping preparing a review for. Initially, when he first got the letter, he didn't respond to the letter, didn't return the phone calls, didn't provide any of the requested information, and was just generally uncooperative with the examiner. When I reached out to the examiner, even though they were familiar with our company and knew we could help the customer, the extension was denied based simply on the customer's conduct. But, so it's very important to, keep that relationship healthy from the very beginning, from right away when you get that letter. Either, make contact or reach out to us and let us get a hold of the examiner for you on your behalf.
Right. And actually, Jerry, I've heard you use the term around the office, character decline. What relevance does that have?
Oh, Mitchell, you are a scholar and a gentleman. I completely forgot about bringing that up, but, thank you for bringing that up because, believe it or not, banks can decline you for character. As little as that may sound, But, you know, the rule of thumb is if a client is a possible reputational risk to the bank, especially a well-known big bank, you know, they will most likely not bank the customer if it's a reputational risk. I mean, for example, you know, individuals who have ties to money launderers, drug traffickers, human traffickers, or someone who has committed financial crimes or certain felony convictions, you know, chances are the bank will not bank you. And, you know, you also have to know, this goes back to what I said earlier about the client needing the bank more than the bank needs them. You know, banks are not obligated to bank anyone. You know, clients aren't entitled to a bank account. As harsh as that may sound, I mean, it is true. You know, banks don't have to bank you, simple as that. And, you know, this is why we see many banks exiting relationships, because clients who do not cooperate or are out of compliance are considered a risk or reputational risk to the bank. I mean, don't get me wrong, a bank will not just want to close you for no reason, but there's no point to giving them a reason to shut you down, you know. So, I mean, thanks for bringing that up, Mitchell. And, you know, that character decline was probably one of the hardest declines I'd have to do when I was a bank examiner, because, you know, a customer would provide the perfect documentation, perfect AML. They know their business like the back of their hand. But, you know, when the bank does conduct that background investigation, you know, if there's things out there on that background investigation that we cannot bank them because this is going to be bad press for the bank, you know, they will decline, and you know, that's what happened. So, you know, so it's also good to be an upstanding citizen, I guess, right? But, you know, like, everybody deserves a chance, and you know, we've had some customers, you know, if you explain it early and are upfront with it and not hiding it, you know, bankers are humans too. They'll understand. Absolutely. So, you know, it's never a black or white area, it's a gray area. So, you know, it's just one thing to be aware of.
It's great information.
Yep. Yeah. All right, and number two, I guess we're at the home stretch, not being transparent. So as stated in the previous slide, you know, it is your business to know your business. For this slide, full transparency is very important. It can be the difference between being approved or being declined, or even worse, being approved and then being declined later on because the bank finds out, you know, as a client, you did not disclose everything. You know, for example, I have approved many clients because at the time I thought they provided me all the required documents and disclosed all their MSB activity. Then a few months later, the bank finds out, as they always do, they weren't honest with us and their accounts were eventually shut down. So this is the whole transparency thing. We hear the word transparency with the federal government, you know, and, you know, as an MSB owner, it is a smart and great idea to be transparent with your bank, because let's say if you're an MSB and you're check cashing with Bank A, but you're doing money transmission with Bank B, and you don't tell Bank A about that, guess what? Bank A and Bank B, they do talk to each other. When it comes to MSB regulations and fighting money laundering and terrorist funding, banks can communicate with one another and let them know what's going on. So banks will always find out your other activity, you know, with what resources they use. So, I mean, it's a good idea to always make sure that you're always upfront with who's examining your account in relationship with the bank. Debbie, have you come across, you know, certain situations that fall in this category?
Sure. As part of the review process, independent review, is to take a look at transaction history. Usually that involves check cashing, and probably the most common one I get is regarding corporate check cashing. And I'll find, you know, several checks, and I'll hear from the customer, but I only cashed one corporate check. And my response to them has to be, okay, well then you're a corporate check casher, and you have to have a policy in place for that, or you have to discontinue that activity. You know, the bottom line is the bank is absolutely going to find out because they have monitoring systems in place to cash those transactions. So if you are going to cash those types of checks, make sure you have the policy in place. I can't stress that strongly enough, because if they find out, you know, almost 100% chance you're going to get shut down if you're doing that and you don't have the policy in place.
Yeah.
And you're not approved for that.
Yeah. I mean, that's completely correct because, you know, and as I stated earlier, imagine being an MSB, being approved for a new account. You're in operation for 2 to 3 months. You got your technology in place. You got your bank accounts in place. You have a customer base growing. Oh, you forgot to tell the bank that you just got accounts where you're also doing money transmission or money orders. And now your accounts are suddenly frozen, and you have a line out there on payday. No one can cash your checks. It's a bad experience, and it happens too often than it should. So, you know, that's one thing to consider. So.
Yeah, and just to reiterate Jerry's point is, you know, we deal with check cashers that say, well, I didn't tell my bank that I cash money orders because those go through a different bank account. Well, guess what? That always comes out in the review process, and you know, that you're going to get found out sooner or later. So it's just best to be transparent up front.
Exactly.
Yeah. Exactly, yeah.
Well said.
Very well said. And, you know, the bank always finds out. No matter what, they always find out. You know, they're worse than my mom finding out I ate the cookies from the cookie jar. So, you know, they always find out. All right, and here we go, the last slide. And the number one reason why a bank would decline or freeze your account or exit your relationship is simply being uncooperative. So, okay, for this final slide, I mean, this is, you know, this is why a bank would decline your application is simply because, you know, as a client, you know, you weren't cooperative. It amazes me how many clients out there apply for the account and then never provide documentation. Take the time to do the application, and when they request documentation, you don't send anything. And then you wonder why, how come my accounts aren't open yet? I mean, because you didn't cooperate. And it amazes me how so many clients have all the proper documentation but never send them in because they feel they don't have to. You know, I've come across so many clients where, you know, I've been doing this for 5, 10 years. My bank knows me. They don't need, you know, they should have everything on file. It doesn't work that way. Guess what? Once the accounts are frozen or shut down, it's probably too late. So, you know, understand, you know, the bank is a heavily regulated entity. You know, as MSBs out there, how many of you have gone to Title 31? I'm seeing some hands raised. So thank you for the participation. So, you know, imagine getting a Title 31 audit every day. I mean, that's basically what banks go through. Banks are heavily scrutinized by the federal government, and it is their job to make sure that the clients that they are banking are all in compliance. With that said, it is actually you, the client, working with your bank to satisfy the federal government's requirements. So I know there has been a lot of hostility against banks lately in the climate that, you know, the industry is in. But if you just change your mindset for a second and think about how the federal government is raining down on these banks to make sure that their clients are in compliance. So basically it's the client and the bank working together to satisfy the federal government's requirements. So, you know, every time I explain that perspective, you know, clients do get more cooperative, and I hope that if any of you come across this situation, it's a good idea to just cooperate, take time to relax, and, you know, pause for a second and just gather those documents or hire a third party like capital compliance experts, and, you know, we'll help you to make sure that the whole process goes smoothly as possible. You know, here at Capital Compliance Experts, you know, we have forged many relationships both with bank examiners and business relationship managers, you know, that we look forward to working with each other and making sure our clients are satisfied. So, you know, with that said, I believe that was our final slide, and, you know, it was my sincere pleasure. It was all our pleasure being here for you guys today, and I'm hoping, you know, we all learned a little something from each other. And here to close us out is Mitchell.
Yeah, so I think actually this would be a good time. We still have a few minutes here to do some Q&A.
Okay.
Let's check here, see if there's any questions. Okay, let's look here.
Okay.
Oh, this is a great question. It looks like it came from a gentleman here. It says, are there specific banks which capital compliance experts has MSB relationships, and also has your firm gotten involved in the virtual currency space? Ooh, this is a good
very great question.
Well, yeah, we definitely have relationships with many banks, really good relationships. We've helped many of our customers who have been closed down by one bank establish another account with another banking institution. So, yes, we can definitely help in that area. Regarding the virtual currency space, maybe.
You know, that's a very I don't want a sensitive question, because you know, when I was working with the big bank for a while, they just did not want to work with virtual currency. Biggest example I can come up with is Bitcoin. As soon as we saw MSB was handling or in business with Bitcoin, we were asked to immediately decline the accounts. So to answer this question, I mean, we'd love to come across virtual currency if we had the opportunity, but there isn't just enough, you know, we haven't come across any virtual currency clients as of yet. But it would be something that, you know, that a lot of certified specialists are being prepared for, and it is part of the lesson plan. But in terms of, you know, have we ever gotten any, you know, experience with virtual currency, the simple answer is no. But if it's there, you know, definitely we will be prepared for it.
Yeah, I think that sums it up pretty well. Let's see here. Let's see if there's any other questions. Oh, perfect. Okay. Says, I got a letter from my bank, and my AML is due next week. What do I do? Oh, man, I've had this happen a lot. Who wants to take this one?
I'll go ahead and take that. First thing you want to do is, you know, have a company perhaps like ours assist you with that. We can definitely have you fax us in the letter that you've received from your bank, get you prepared with everything that you need for the bank, you know, and even reach out to the bank, and chances are we probably already have a relationship with them, and help get that account secured.
Fantastic. All right, looks like we have one more here, and we are running short on time, so we'll keep it brief. Actually, we have a couple to choose from. Let's see. This one's a pretty straightforward question. I think it applies to a lot of different scenarios. It says, how does the bank view having more than one MSB account?
Oh, okay, that's actually a great question. You know, the simple answer is, Mitchell, and thank you to whoever asked that question. That's a great question, especially pertaining to this online workshop. The bank is okay with it as long as you are transparent. If you disclose everything, if you have other bank accounts out there or other bank activity, if you disclose it, the auditor at the bank will understand it a lot better, and we'll work with you to make sure that you have all the proper documents and, you know, state licenses and permits in place to make sure that you, the business is in compliance and in order. The bad thing to do is, as we mentioned earlier, is not letting the banker know or the bank know that you do have that other account at another bank. I mean, like we said, like we were stressed earlier, people, the bank will always find out. So, you know, it's always good to just disclose everything from the beginning.
Great. That question was probably asked at the beginning of the slideshow. And
probably.
Awesome. Very cool. Well, again, you know, we didn't get to all the questions, but we will. And I kind of want to wrap it up here. Just so everyone on this call is up to speed here, we are capital compliance experts. We are compliance consultants specializing in this space. Pretty much everything we've talked about, almost all, if not all, we do on a daily basis. AML compliance programs custom to your business, independent reviews, and actually annual oversight we're doing a lot of right now. You know, these are all, you know, all these items that we've talked about are things that we do on the daily basis. And the great thing too is, you know, even if you're wondering to yourself, I have an AML program, I'm not sure if it's good, I think it's good, but, you know, it was a couple of years ago, give us a call, and we'd be more than happy to take a look at it. We do that, you know, day in, day out. And you know, you get a letter from your bank, you know, that's another perfect opportunity to reach out to us, you know, reach out to Jerry, and we can, you know, spend some time with you.
Definitely.
So yeah, we do have another upcoming webinar. It's going to be even more fantastic than this one. It is.
I thought this was pretty fantastic.
It's pretty good, yeah. December 2nd, it's going to be AML requirements. So we're going to be, again, on a similar topic, but a little bit more focused on, you know, requirements in your AML program. So, you know, with that said, again, our number, I'm going to leave this up here for a little bit. You know, this last slide, it has some of our contact information. And really anyone that you reach here is pretty educated and should be able to help you. But whether your deadline is, you know, whether you have a deadline or not, we can definitely help you and even just guide you and spend a little time with you. And we'll definitely give you an honest opinion. If you have a great AML program, you're doing great. We love to tell people they're on the right track. So with that said, we'll close it out. Thank you everyone so much for attending, and guys, it was great.
Yeah, thanks for
joining us.